Hey YouTube, hope you have a great week of trading. As always, I really appreciate your support, so if you like this video, give it a thumbs up, and if you want to learn about investing, subscribe to this channel. Today I'm going to talk about my Robinhood portfolio, currently at $938,000. Past week, up 1.02%, almost up to $958,000. Past month, up 6%, or $54,000. Past year, up 28%, or $208,000. Year to date, up 14%, or $119,000. And all time is 206%, or $632,000. I've been holding this account for about 7 years now, and I've been capitalizing on the compound growth as I continue to add to my portfolio. Take a look at my buying power. I do have $510 in my portfolio at a yield of 4.5% because I have Robinhood Gold. I do have another $110,000 in a high yield savings account at a yield of 4.25%, so that I can gradually deploy into the market when there's opportunities to buy. So taking a look at my portfolio, my largest position is Nvidia. They make GPU chips, and they're a leader in the AI space. They also have high performance computing chips, driving much of the current boom in tech innovation. Its stock surged over 25% year to date, almost 30%, trading about $178 per share, thanks to the AI demand and strong earnings results. So looking forward to the earnings report that's coming later in August. This makes up about 29% portfolio, or $273,000. I'm up 3,317% on this position with an average cost of $5.21 per share. And I do plan to continue holding this long term because I think the demand will continue to grow and is sustainable long term. A lot of analysts remain bullish, projecting an average target of around $235 per share, with longer term forecasts suggesting continued upside if the company maintains its technology edge in GPUs for AI data centers, which I am confident in given their leadership in this space. So I think there's a lot of the price reflecting the premium valuation for both market dominance and high investor expectations. So we'll see how they do in the upcoming earnings report. Next is Spider S&P 500 ETF, which is a holding of 500 largest U.S. companies. It's a great way to get diversified exposure to the stock market. This makes up 20% of my portfolio, or $194,000, up 2.75% on this position. And I think if you're just starting off, this ETF is a great way to just start, or you can also check out Vanguard ETFs. It's considered one of the core set it and forget it U.S. equity holding in most portfolios. And I think even though it's reaching all-time highs, it's a great way to get a dollar cost average into this ETF, given its volatility. Taking a look at the next largest holding, Meta Platforms. They have holdings, they're a parent company of Facebook, Instagram, WhatsApp, and VR, AR, or the metaverse. They soared today because they have very positive earnings report yesterday, and a lot of the even though I had high expectations, it beat a lot of the estimates. So fresh all-time highs with strong earnings, and it's one of the top performers in the Mag 7 stocks this year, and their management has increased CapEx, or capital expenditures, to spur their AI innovation across its platforms, which led to 14% projected revenue growth for this year. Investors are watching for the risks in AI competition and labor costs increase, but the strong momentum, which is outpacing a lot of the other tech companies. Next is Amazon, which is a big e-commerce company. They also have cloud computing services, AWS. They're trading over $230 per share Actually, let's go back to Meta. This makes up 5.24% portfolio or $49,000. You can see up almost 12% or $5,000. Total return of 321%. Average cost of $184 per share. It's another stock that I'll hold long term. Amazon, this makes up 5.19% portfolio or $48,000, up 122% on this position. And Amazon, they continue to grow in their cloud services, and e-commerce continues to show the resilience and strength as they drive profitability. And also recently, the founder has drawn headlines, but Wall Street continues to be bullish overall with their operational efficiency. And I think Amazon will continue to improve their technology and logistics as they drive further earnings. Next is Apple. A lot of their revenue comes from iPhones, Mac computers, iPads, as well as wearable devices like Apple Watch and AirPods. They're also growing in their services business like Apple TV, their iCloud service, Apple Music, Apple Arcade, Apple News. A lot of these subscription services, as there's more and more consumers in their hardware products, there's going to be more users in the software products. And even though Apple lags in the Mag 7 stocks in 2025, I continue to have confidence in this company, even though they're late in the AI game. But I think once they do deploy, a lot of the devices will adopt this service. So overall, down 6% this year. Hopefully it'll rebound with upcoming earnings reports. And a lot of investors are closely watching the new product cycles as they face legal challenges overall. And forecasts suggest slow and steady growth, but it continues to be a blue chip favorite for dividends and long-term compounding. This makes up 4.9% portfolio or $45,000. I'm up 409% on this position. Next is Microsoft, which is big in enterprise services and cloud computing. This makes up 4.61% portfolio of $43,000, 405% on this position. They had a pretty solid earnings report yesterday. You can see it surged overall up to $562 per share, but now it's coming back down. I think Microsoft, as they continue to grow their cloud and AI integration across Azure and Microsoft 365, that'll drive the revenue and help with their operating margins, which is pretty strong overall. And they're also improving the adoption of enterprise AI. Analysts continue to see leadership in cloud, but note that it's selling at a pretty high multiple. So a lot of the price, the stock price is pricing in a lot of growth and just a lot of optimism. Next is Vanguard Growth ETF, ticker symbol VUG. This makes up 4.36% portfolio or $40,800, 51% on this position. This tracks a lot of the US large cap growth stocks, and many of its key holdings overlap with some of my individual stocks like Nvidia, Microsoft, Meta, Apple, Amazon, among others. And it's ideal for those who are betting on long-term US tech and growth equity trends. Next is Vanguard S&P 500 ETF. It's a very low expense ratio and high liquidity, so it's another ETF that's great to start with, similar to SPY. A lot of their fund inflows this year signal high investor confidence, and it's a core component of passive investing approach. And this makes up 3.84% portfolio or $35,900, up 17% on this position. I don't plan to add any more to VOO, but we'll buy more SPY as I continue to sell covered call options just to get passive income. Next is Vanguard Information Technology ETF, VGT. This focuses on US tech, and top holdings overlap with many of the other tech stocks in my portfolio. It's a great way to get diversified exposure to tech. And overall, this makes up 3.47% portfolio, or $32,445, up 377% on this position. I'll continue to hold VGT and VOO just because I don't want to get taxed on my gains, but I'll continue to get more diversified exposure into SPY. Next is Taiwan Semiconductor Manufacturing Company, ticker symbol TSM. This makes up 3.12% portfolio, or $29,000, up 188% on this position. And this is one of those stocks that get that benefit from the AI boom. And overall, you see a lot of optimism in the past couple months. The company commands over 60% of global chip foundry spending and is investing heavily in U.S. plant expansion to diversify geopolitical risk. And I think as they diversify their plants, I think that'll help with overall market risk. But it does increase their expenditure because they have to invest in those areas. But analysts overall remain bullish, seeing this stock as essential to global supply chains, powering AI, smartphones, and high-end computing. Next is Mercado Libre. This is kind of like the Amazon of Latin America. It's trading at $2,356. Hopefully they get some stock splits so I can trade some options on this. And their earnings growth led by expansion in Argentina and Brazil. And analysts see double-digit upside as their digital payments service, Mercado Pago, and Mercado Credito, or Credit, fintech divisions continue to gain shares. And also Latin America growth is a tailwind, though currency and political risks remain factors. This makes up 2.74% portfolio, or $25,705, up 122% on this position. I do have a lot of confidence in Meli, and we'll hold this long term. Next is Visa, which is a payment processing company. This makes up 2.5% portfolio, or $23,000, up 190% on this position. So Visa, it continues to benefit from global digital payment expansion and travel recovery, but I'm keeping an eye on the regulatory pressures that are put on Visa. It remains a staple for low volatility, long-term growth, and dividend growth. You can see that reflected in the stock price. Next is Alphabet Class A shares, which has voting rights. I also have Class C shares. This makes up 2% portfolio in Class A shares. I do have another 2% in Class C, so about 4%, or I think almost $40,000, up 196% on the position. And a lot of the revenue comes from online advertising. They're also growing in cloud and YouTube. That does take up a lot of capital expenditure in AI infrastructure, but I do believe their investments will help the company grow long term. And like other tech giants, antitrust and regulatory risk continue, but the company's diverse business model helps with that risk. Next is CrowdStrike, which is a cybersecurity company. This makes up 1.63% portfolio, or $15,000, up 223% on this position. So CrowdStrike remains a top cybersecurity stock in the growth sector as the business prioritizes ransomware defense, and the company's recurring revenue model and expanding platform keep fueling the growth overall, but it's pretty volatile and can be expected to due to the rich tech valuations. This is Alphabet Class C shares. Like I said, does not have voting rights, so I have about $35,000, or I think 3.7% in my portfolio. This is up 211% on this position. Next is Costco, which is a big retail company that gains a lot of revenue from their membership services, makes a 1.5% portfolio of $14,000, up 250% on this position. So Costco, their membership renewals are high, and the company is praised for inflation-resistant pricing, bulk sales, and private label strength. And I think there's a lot of confidence in this that I'll hold long term. Every couple years, they do pay out a special dividend, which I really appreciate as a shareholder. Next is Berkshire Hathaway, which is Warren Buffett's company. They have a lot of different companies under its portfolio, which include partially owned as well as fully owned companies. This makes up 0.97% portfolio, or $9,000, up 151% on this position. And Berkshire Hathaway remains a blue chip favorite, benefiting from broad economic exposure and Warren Buffett's capital allocation record. So he has a pretty solid track record overall. It's a pretty defensive position, and their big cash reserves help the company weather volatility, and its mix of insurance, energy, rail, and financials provides balanced exposure to the market. Next is Alibaba, which is an e-commerce company in China. They also provide cloud computing services. This makes up 0.93% portfolio, or $8,700, down 29% on this position. Alibaba does face pressure from China's regulatory environment and has underperformed global tech peers, but it remains one of the most dominant e-commerce and fintech players in Asia, and investors are watching for signs of regulatory easing and a rebound as their demand continues to grow. I won't sell any of my Alibaba position just to get some exposure to international market like China, and I'll follow it long term. Next is Fortinet, which is a cybersecurity company. This makes up 0.77% portfolio, or $7,200, 45% on this position. So both Fortinet and Palo Alto Network are both cybersecurity companies. Palo Alto Network makes up 0.72% portfolio, or $6,600, up 45% on this position. And they're leaders in the cybersecurity space, offering strong long-term growth potential as global enterprises invest heavily in cloud and network security. And recent volatility reflects some sector rotation and concerns over spending slowdowns, but industry tailwinds reflect their significance and dominance in the market. Last but not least is Baozun, which is the leading e-commerce solution provider in China. It does offer exposure to the digitalization of Chinese retail, but it does face stiff competition and regulatory uncertainty. It's a high risk play. I am down 91% on this position, and this makes up 0.04% portfolio, or $300. I might sell it at some point just to offset some of my gains in my portfolio. But this is my portfolio overall in Robinhood. I do have some other capital in my savings account that I plan to deploy into this stock market just to dollar cost average and continue to sell covered calls to get more passive income. I do have optimistic feelings about the upcoming earnings reports, and I'll be following Nvidia specifically because it does make up a big portion of my portfolio. What is in your portfolio? Comment down below. Remember to subscribe to my channel and like this video so that it really helps the channel.